Welcome to Season 2 of Wattle Partners Market Thinkers series. This season is a change of pace from 2020, where we spoke to leading fund managers about managing capital. This series, we're going to dedicate it to themes. They are the most important technological, demographic, or societal trend changes that are occurring globally. Drew and I will be speaking to an expert each week, spanning either financial markets, the broader industry, about these themes and trying to dig further into them. Why themes? History has really showed that if you can pick a theme and a change and then invest into it, then ultimately it's a big driver of wealth and success. So at our investment committee, when we meet, Drew and I meet, and externals, we always talk about big themes. It's not just themes though. You could have easily picked smartphones in the 1990s or early 2000s and picked BlackBerry as Nokia as the most successful. Obviously not the case, and you should have been in Apple. So it's not just about themes, it's also picking the appropriate asset within that theme. Over the next series of 10, we're going to be talking about themes that we've identified, and they include the blockchain or cryptocurrency, digital advertising and the new face of media, inflation, which is very topical at the moment, high performance computing and how 5G fits into that, digitization of retail, 3D printing, new energy, energy storage and electrification, big data in the cloud, e-commerce and digital payments. And of course, this session is dedicated to the growing Asian middle class. So Drew, do you want to just introduce the theme and introduce our guest?
It sounds like a busy few weeks ahead, doesn't it, Jamie, with all those
I can't even say half the words, Drew. So yes, it's going to be busy.
Yeah, I think, we'll introduce Sunny Bangia from Antipodes Partners, and the topic today is the Asian middle class, but and the huge consumption theme that's coming out of that. We were talking to Sunny before this, and he kind of pointed out that the middle class is a very broad definition, and middle class in different countries is defined very differently. So I think he's going to run us through a bit of a more nuanced breakdown in terms of the income cohorts that are within the middle class, particularly in Asia, and the different consumption trends and themes that are occurring within different parts of the region. So I'd thank Sunny for joining us, and maybe ask us, provide a bit of background in your history in Asia and in financial markets, Sunny.
Well, thanks very much, guys, for having me on. I'm very excited to be here and talk about something that I'm very passionate about, just the growing emergence of the Asian middle class that we've been witnessing for the last several decades, and still is very much in tract and probably into another different phase in terms of its growth trajectory. I work at Antipodes Partners. We're a global pragmatic value manager. I focus on Asian equities, leading the Asian equity research effort at the firm. I've been doing Asian equities for just under 15 years. So we've been, witnessed the emergence of the region quite broadly, and Asia's very quite a diverse range of opportunities exist in Asia today, of which the Asian middle class being front and center as one of the most important themes over the next decade.
And just a question around, so you say pragmatic value, does that mean you don't just look at PE ratios, or?
Yeah, look, obviously we absolutely look at what businesses are worth, and it's our job to work out, what is the intrinsic value of each and every business, and whether we're, getting it at a cheaper valuation or cheaper price today than what the market's kind of priced in. But yeah, we don't dogmatically just look at ratios. We want to buy high quality, cheap businesses and own them through the cycle, because that's kind of what that's what our mantra is.
Excellent. Do you want to shoot through these kind of scene setting questions, Jamie?
Well, I actually want to get off our agenda straight away, Drew. So can we just talk about how you said the definition of a middle class is different depending on who you're talking to. In Australia, or we're in Melbourne, middle class would be eastern suburbs, probably income streams of 100 plus and relatively wealthy. What's the definition in Asia, or what should we be thinking about when you say or when we see this theme, Asian middle class and growth, is that how do we define their wealth? Is there a GDP number or is there a income per month number?
Yeah, look, it's an interesting point. It varies nation by nation. One of the key, if you think about a household, the largest consumption item for a household will be their house. House prices are very different across all Asian markets, and we think about house prices relative to incomes and whether that ratio is too high or too low. Even in a big country like China, house price to income ratios vary across all different cities in China. But broadly speaking, we think about, in terms of China anyway, the middle class is $10,000 to $15,000 plus, and what is the upper income brackets? So let's call it the premium income brackets. That is $35,000 dollars and plus.
And what are those? And how many people are we looking at within those, or kind of percentage-wise in those groups?
Yeah, absolutely. So, we've got this slide here, the China income population mix. And these are basically different income cohorts at a household income level through time. So you can really see what China looked like back in 1990, just as it was entering in to the global trading system, and what China looks like today. And so today, that premium consumer is about 80 million people. So the population of Germany, that's how much is sitting in that $35,000 plus income cohort. And over the next decade, that's going to grow to about 300 million people. So just shy of the population of the United States. It is going to be the single biggest driving force in global consumption. It's going to be a big propellant of the Chinese consumer. And, businesses around the world are very, very eager to be exposed to this consumer. So, we do a lot of work on thinking about these big trends and themes. And then, as you said earlier on, it's picking the right business or asset that can benefit from this structural trend.
And if you were comparing that to, say, India or Korea or Indonesia, what does the split look like? I assume India would be a few years back.
Yeah. So if we look at that, if we just keep looking at that chart of the income population mix for China, and we're at 2021 here now in China. India is probably in the mid 2000s in terms of the bars. If you can visualize the bars. Yep. In Indonesia is probably also mid 2000s. And so that's just a function of those economies transitioning towards consumption economies, or the income levels in those economies now transitioning to more of a middle class society, whereas China's already got a very large middle class society. So that $15,000 and above income is, as you can see in those charts, is pretty much the whole Chinese consumer market. But in the early 2000s, when China was entered WTO and economy really took off, actually, back then, over 50% of the country was living on $3 a day or less. And now that is, we're talking about a couple of percent, on these numbers. So it's been an incredible transition towards a middle class society, an amazing move, moving hundreds of millions of people out of poverty. And so today it's a very different consumer in China versus 15 years ago, but the consumer in India is more akin to the consumer in China 15 years ago.
Yeah, okay. And you're talking about household income, going through the roof effectively. It would be, similar to household income in Australia, tripling and quadrupling, and then the effects on the economy of that. So, I was supposed to ask you 5 quick questions, and I kind of made the first one 10 minutes. So let's go on to the next 4.
to bring some context.
Yeah, the context of the start of this. But how much of the sneaker and apparel giant Nike's revenue is derived from Asia?
Yeah, Nike is single biggest most important market in Asia is China. That alone accounts for about 15 to 16%.
Wow.
And total Asia will now be just under a quarter of the business. So, Nike is obviously Asia is very important for Nike. China is very important for Nike. You're just seeing general consumption trends increase, like athleisure as a trend was a few years behind in Asia.
Yep.
And that's now just really taking off.
And how much of the Chinese consumption was cashless in 2020?
Yeah, so just sorry for taking a bit longer, but going to this slide, which is a really important slide. It's over the cashless system in China is approaching about 85%. So 85% of all transactions in China are happening on a smartphone. That is unprecedented in terms of the world. Asia broadly is following this cashless system because these countries in Asia are mobile-first markets.
Yep.
The adoption of fintech, cashless systems is just prolific. And the important trend here is that your bank is not down the road; it's on your phone. So in China, you buy insurance, auto insurance, life insurance, credit cards, all through an app on your phone, generally Ant Financial or WeChat Pay.
Yep.
And that's a trend we just see emerging all over Asia over the next decade.
I had a friend that went to China and she was visiting her family, and she went into a 7-Eleven and couldn't work out how to pay. And her mum had to show her that it's a cashless WePay shop. So,
Yeah.
So even, it's interesting that the industrialization, I suppose that's the right word, industrialization is the format, when you think about it, is the same format. Intuitively, you'd think it was the same format that we went through, or other third worlds went through, but it's not. Technology is having a big impact.
Jumping multiple steps, isn't it?
Yeah. So the sale of products growing. Which sale of products is growing faster in China? Shampoo or loafers? And
I took out the Gucci part.
He
had Gucci loafers, but just loafers.
Yeah, look, I think it's definitely now high-end loafers, whether they be of the group
as a proxy
of Gucci brand. No, but generally speaking, higher end, consumption of loafers or just higher end apparel. This is on this is growing in the 20%.
Wow.
In China, because you've just seen this huge emergence of this middle class. Majority of the country has moved into the middle class brackets, but also the premium class has become very large. Just as context, the premium class economy in China for the last decade has grown at about 20% in size. And we think will grow in probably the mid-teens to get to that 300 million size level. So it's definitely a big consumption trend.
And
in India, what is it?
Yeah, India's a bit different. Shampoo, and just general FMCG products are growing at a quite healthy clip because India is still quite far behind, and people are just trading into these first-time FMCG items. But India has got other fast-growing products. So India's a highly underpenetrated credit economy.
Okay.
So mortgage. If we go to this slide here, just looks at household debt to GDP per capita.
Yes.
Across all these Asian countries, and we've got the Western countries on the right-hand corner.
Yep.
What we notice immediately is, India and Indonesia strike out as one of the most underpenetrated credit economies on the planet. And so, mortgage growth in India is growing in the 20s. It's a very fast-growing category, people taking out home loans for the first time. And even if India grows its household debt at a pretty stellar pace for the next decade, it's only going to catch up to South Africa by the end of the decade.
Not catching Australia as the most leveraged country in the world.
Yeah.
I like that one in the top right-hand corner.
Probably not in this decade.
Yeah.
And if you could sell, if you didn't have a job anymore and you're an entrepreneur and you needed to sell one product into the Asian middle class, Sonny, what would that be?
Yeah, absolutely. I mean, it's going to be an intangible product. It's going to be financial services, and largely for a few reasons. Well, first reason, these are the most mobile first markets in the world. Everyone has a smartphone in Asia. And data costs are very low, particularly in countries like India. So access to cheap data on a smartphone means that financial services are now at my fingertips. And when you combine that with under-penetration, so life insurance penetration in China is one of the lowest in the world. India, it's one of the lowest in the world. We know that these countries are going to get wealthier, and we know as you build wealth, you want to protect your wealth and you want to protect your assets. So life insurance becomes a very important part of that dynamic. Ping An Insurance is China's largest life insurance business, so we're very positive in that trend. Yes. And as we saw it in the previous slide, like in India, banking, mortgages, credit cards, still very underpenetrated. So we think one of the big trends in Asia over the next decade will be the adoption, like we've seen in China, will be just the adoption of the cashless systems, and that will proliferate into other financial service products. So definitely focus on that element of the market as the economies become more service driven in nature.
I'd be leaving finance if I was if I was selling to Asia. Yeah, get out of there.
And you mentioned Indonesia a number of times. I mean, I think as Australians we forget about Indonesia. We kind of fly over it, but it's an incredibly populous country, and it's more like India, is it, in terms of its infancy and where it's growing and the middle class?
Yeah, that's right. In terms of its development, it's probably even a little bit ahead of India. But some of the trends we see are very positive for Indonesia, which are the same for India, which is e-commerce penetration is very low. Talking about 5 to 7% penetration in Indonesia. Household debt to GDP is very low. Indonesians are also, they're buying things online for the first time. It's a mobile first market. They're buying financial services for the first time. So those secular trends that we see for India are also very similar for Indonesia. The government is very focused in winning some of that manufacturing business, some of that reshoring, offshoring that's going to happen and go to Vietnam or other South. It's also a big opportunity for Indonesia, and the government's been building a lot of infrastructure to facilitate that opportunity, and that's going to be very positive for the economy and the Indonesian consumer.
So why do all these other countries better at cashless and we can't do QR codes to go to restaurants?
That's just Victoria, mate. You can. Sonny, you're in New South Wales, aren't you? You're in Sydney, so
yeah.
He can do QR card.
It's just better and faster adoption, like when you give your child an iPad and they know how to use it quicker than you do. Is it?
You gave your child a mirror, Drew, with a pen. It wasn't a real iPad.
It's creative.
Yeah, I think that's a function of habits take time to change. If you think about, it takes 30 to maybe 90 days to change a habit. COVID's definitely changed a few habits. QR codes are now much more common in New South Wales, and these kind of trends were basically just started off in emerging markets. Just off the get-go. Look, it's also hard to build out banking distribution, and the banking systems of China and India are quite complex, right? They've spent all their times being state-run banks, or have not really focused on digitalization. And so as these big tech companies, particularly in China, offered this service on people's phones, the experience was very good. Whereas walking into a Chinese bank, the financial service experience is very poor. And these Chinese regional banks typically focus on corporate lending rather than retail banking lending. So, there was a few nuances such as that. And then along with the fact that the adoption of mobile phones led to just a greater awareness that, my smartphone is my computer, and I can do everything through my smartphone. And that's created a much quicker adoption curve, which we think is still very much intact.
Is that a good segue into our Sorry, Jamie.
Yeah, go, Drew. You're right.
And a good segue into it. We were trying to split this into about 3 different kind of sectors to focus on. So financials and the opportunity in kind of credit growth across, and I guess insurance growth across the Indian and Chinese economies. Should we break that down a little bit more? What's the credit growth you expect in the next few years in India, for example, or
what's the life cycle of typically someone that is experiencing this? You know, if you're going from moving into middle class, do you first get credit at your local shops, or do you get a credit card, or do you get your mortgage, or do you get, you know, business loan? What's the typical life cycle? And I assume it's different depends where you're at, but what's the life cycle of generally, you know, that you'd be looking at of people getting credit in their lives?
Yeah, absolutely. You know, traditionally it's been, you know, very much like what we've experienced in Western markets, as in, you know, you get to a stage in your life, you've been working for a few years, you want to buy a home, you go to your bank, get a mortgage. That's a similar life cycle that's been happening in most Asian economies. You have the more mature Asian economies like Japan or South Korea, where the household debt to GDP is higher, and they are more developed in their progression, and they've turned into more technology, you know, driven economies. And then you have like Indonesia and India, which are right at the other end of the spectrum, where people are getting a mortgage for the first time because they just purchased a home, they've just married. You know, it's typically some change in their lifestyle. But the other very powerful trend that's happening, which was, you know, let's say first in China, and is kind of proliferating across Asia and other emerging markets, is this concept of basically e-commerce. You buy something online and you don't pay for it straight away. Now, there's a company in Australia called Afterpay, which is called the buy now, pay later. But this concept has been happening in China for a very long time, where, you know, effectively you buy something, you buy a small ticket item on an e-commerce website, and you pay for it later, either through installments or a small consumer ticket loan. And that is exploding across the whole region. And that is the big opportunity in Asia in terms of consumer credit. We know that a lot of these countries have low debt to GDP, so that's a good spot to be in. We know their incomes are growing at a quite healthy clip, and we also know they're adopting e-commerce for the first time. So, you know, India's e-commerce penetration was 2 to 3% prior to COVID, and it's taken a big shot on the arm. And same with Indonesia and Vietnam and all these other Southeast Asian economies. And so there's not only e-commerce as an opportunity, but it's also the consumer loan of that e-commerce ticket purchase that's creating this huge opportunity in financial services as well.
Is that so Tencent took a stake in Afterpay last year, was that right? Kind of mid-crisis?
Yeah, well, Tencent has an interesting business model. They have stakes in various businesses around the world, and, you know, they took a stake in Afterpay in the crisis last year. But, you know, very unclear what they're going to do with that stake long term. It could be just wait and see. But, you know, Tencent offers this service in China, which is, you know, you buy something on WeChat Pay, and they offer you, you know, a buy now, pay later style product, because, you know, they see that as the, you know, financial services opportunity with a payments opportunity, which go hand in hand. Yeah.
And you go, Jamie.
Back to home loans. So if I'm in India or China and I go and say, okay, I'm middle class now and I want to get a mortgage, is it very similar to the way we would consume mortgages? If I'm middle class in Australia, I typically go out and borrow 95% of the house, and then try to pay it off over the next 30 years? Or is it like, you know, credit used to be in the 60s in Australia or the 50s, where you had to have more or less 40% of the purchase price, and, you know, and it was a lot more contained. So I suppose my question is, if I'm in India and I want to buy a house, what kind of lending facility can I get? Can I get 95% like I can in Australia?
Yeah, no, it's more conservative across most Asian countries, including India.
Yeah.
So the origination LVRs are, you know, closer to the 70s. So you kind of have to save up and or get maybe some support from your parents, or just save up and before you buy a home.
Yep.
The banking market in India is very different to Australia. So think about it as that 70 to 75% of the banks in India are run by the government. So just to give you context, my grandfather had set up a term deposit for me a long time ago in India with the State Bank of India.
Yep.
And through a process of poor administration and bureaucracy, they can no longer verify me as that account holder. So every time I go there, they kind of say, well, this is term deposit in my name. Can't you, this is my proof of ID. Just the level of sophistication in terms of IT and infrastructure is not very high. So the experience, the retail experience with public sector Indian banks is very poor.
Yeah. Okay.
So the private sector Indian banks is generally where the middle class, as you say, are going. They're going to the private sector banks, which they only have 20-25% market share. But they're basically taking near 100% of incremental retail lending. And they're very digital savvy banks. They operate very digital. They acquire customers more digitally, not just through the branch network, but also very digitally. But yeah, the process is the same. You obviously you will have an engagement with a bank, and it could be the fact that that bank has a strong association with your employer. It might be taking the corporate deposits of your employer, and therefore they're offering you basically a hook to come and bank with them through maybe a discounted mortgage. So that's all pretty straightforward. But the opportunity is just large because the mortgage debt to GDP is still quite low. There's about 700-800 million debit cards in India, but only 100 million credit cards.
Yeah. Okay.
So credit card penetration is still got a long way to run. And HDFC Bank has 1 in 3 of every credit card that's out there in India. So they're dominating that market. And as we spend more money online and we, do things by e-commerce, we use our credit card. So that's a big opportunity as well for HDFC Bank to participate in as well.
And then the data as well.
Absolutely. Then it's all the data you build as you're working out more and more parts of the consumer mortgages, and then offer other tangential products such as insurance and asset management.
That's a core holding in the fund, HDFC.
Yeah, we bought HDFC Bank in the crisis of last year. It's a name we've followed for a long period of time. High quality banking franchise in India, and COVID really gave us that opportunity to buy it when stocks in India were being sold down. Emerging market stocks were being sold down very heavily, and our confidence came with just the 30-year history of risk management at the business. Every downturn HDFC has proven to handle it very well. They've got the lowest cost of deposits in the nation, which allows them to do fairly lower than industry average risky lending, as in through their deposit franchise advantage, they can offer mortgage rates to much higher quality borrowers, offer credit cards to much higher quality borrowers, and still make a very healthy net interest margin spread. And that's been consistent through time. And, India's got a lot of deposits, but those deposits sit in rural India. And it's hard for an urban center bank to tap those deposits. HDFC is probably the only bank that is really tapping those deposits. So tapping low-cost deposits in rural India and then lending them to urban India. And that kind of advantage, that's a structural advantage that we don't think other Indian banks, even other private sector Indian banks.
What's the net interest margin like for HDFC?
Yeah, so overall in the whole business, it's about high threes. But obviously depends product to product. So credit cards will be more and mortgage will be less. But generally high threes. It's and very comfortably the loan book can grow at 15 to 20%.
So it's like the CBA of the Australian net interest margin is like 1.8 at the moment. So and HDFC sounds like the CBA of India with the strongest brand and market position.
Sounds safer than CBA.
Well, I was looking at it last night. They got 19%. Is it capital adequacy? About 19% compared to 12 for Australia.
Yeah, very well capitalized, and yeah, in a way to think about it as like the CBA of India, very retail, strong banking franchise, very strong association with consumers, and just best in class in various mortgages, credit cards.
And loan growth in India is something like 15-16% compared to something like 1% in Australia, or system growth anyway.
That's right. So India, has got much faster household credit growth because of the underpenetration argument, but also now after COVID, India has recovered quite sharply. So mortgage loans or auto loans are above 2019 levels. So India's really come out and recovered in a very nice fashion, and HTC is participating in that.
When we talk about banks, once you buy a house, you typically have to insure it. So is there an insurance company that you think, can you talk about an insurance company that you might hold or you like in this area?
Yeah, sure. What's really interesting about the Chinese life insurance market is, we show those charts how wealthy China's become over the last 15 years, and will continue to go, and the trends are still very positive. But life insurance penetration in China is actually behind India, if you believe it or not.
Yeah, okay.
And that's a function of, a very savings-driven household sector. But even with the savings that the Chinese household sector has, we're at a point now where, if the main income earner of every Chinese household was to, pass away, obviously that's pretty extreme what I'm saying, the gap that is estimated by actuarial experts is close to 55 trillion US dollars income gaps. So there's a huge need to plug that gap. Now, whose liability will this be? Well, obviously it's the householder's liability. It could be the government's liability through social safety nets, and China doesn't really have a very strong social safety net. Or we allow the private sector or insurance companies to plug that gap and offer a life insurance product. And that's what attracts us about the life insurance industry in China. It's a structural growth industry where these businesses have a long duration of growth. And Ping An is the most dynamic private sector player with a very strong digital franchise, very, very, very powerful tech ecosystem. And, a little bit, they've also got various other financial services bolted on. So a Ping An life insurance sales agent isn't just selling life insurance; they're also referring their clients to Ping An Bank for a mortgage or an auto loan. It's got auto insurance business. So as a result, it's a full service financial service offering in China, but with life insurance as the main angle.
So I've heard it referred to as China's biggest tech company by some people. Maybe not the biggest tech company, but
yeah. Look, Ping An is investing about 4 to 5% of their revenue each year in technology, which is very differentiated to a typical financial services organization. Ping An has about 25,000 IT software engineers. So it's really heavily investing in technology, and the reason is not because they want to turn into Microsoft or Google. It's because building a technology advantage through either knowing your customer better through big data, getting your life insurance sales agent better trained on different products, understanding the customer better, will create just higher quality sales sell-through and better agent retention. And if you don't do it, you're basically going to be just like everyone else in the industry. So it's a real competitive advantage they're building that will compound over time. These investments they make may not draw all the fruits in year one, but by year 3, year 4, their ability to understand their customer, cross-sell, target policies, look after them, will be just far superior to the peers who have not done this investments. And that's the big angle for Ping An. It's just compounding that competitive advantage each year, so that competitive advantage compounds to a very big number over 5 years.
We kind of saw, I think, this concept of, going outside your core business and investing into ancillary technologies. Seek got sold off something like 20% because they're looking at, investing into venture capital or other growth areas. Is it a more entrepreneurial spirit in China or Asia compared to Australia? Is that would you agree to well, we'll call it tall poppy or something in Australia, but it seems to companies get rewarded over there for thinking about the future, where they tend to get punished here unless they can pay. But
in the US, it's kind of similar too. Like if you get rewarded for being entrepreneurial and thinking about other streams of income streams for your shareholders, but in Australia, you get destroyed.
Dividend.
Yeah. So.
That's right. So look, China has. Today, 1 in every 3 global unicorns are formed in China.
1 in 3, is it?
Yeah.
Yep.
So they've absolutely got a massive startup culture, and the entrepreneurial spirit is quite high. But what we see in technology companies in China, their focus is on consumer tech, because you've got this 1.4 billion population. You've got this enormous middle class and enormous premium class. So there's actually this huge revenue opportunity if you just crack that.
Yep.
So, if you get e-commerce right in China, your company's market cap will be worth hundreds of billions of dollars. If you get payments right, your company will be worth hundreds of billions of dollars. If you get XYZ right in that space, so it's a very high reward in getting that right. You get social media right, that's going to be that opportunity, and as a result, there's just become this enormous creation of companies and value in China. Because of the consumer, it's just such a large opportunity. But now where China wants to really move up the technology curve is in things like automation, in semiconductor manufacturing.
Yep.
So if you think about Chinese tech companies, China is effectively a very closed off technology market. It's very hard for Western companies to come into China and get to the scale. So, these Chinese tech companies, whether they be Tencent, Alibaba, Meituan, or even ByteDance, which is TikTok's parent, all these companies are collecting enormous amounts of data on their own users. And the next level is, what do we do with this data? How do we better utilize this data to better target advertising, or just generally improving our service offerings? For that, we need more technology. For that, we need access to US semiconductors. We need access to US semiconductor design. So they're very dependent on the US tech ecosystem. But increasingly, with the Chinese longer term strategy, is to in-house that also in China. So the funding that's going to semiconductor design companies in China is extraordinary today. The government's sponsoring a lot of startups in that space. So something we'll probably hear about more in the next 3 to 4 years. More and more, like NVIDIA type companies or Intel type companies that pop up in China over the next 3 to 5 years.
Essentially creating the whole vertical chain within China rather than
being reliant on the US, because we clearly know that's a huge vulnerability for China. No doubt, the United States leads the world in US semiconductor design. All the manufacturing happens in Taiwan or South Korea at the leading edge. So so China and the United States are very dependent on Taiwan, TSMC, but China wants to, try to build out that domestic ecosystem, which will, it will take time. It will take time, experience, knowledge, know-how, but that's the path they're on.
Yeah, Drew and I were in Hong Kong a few years ago, and we met well, we were at a presentation. We didn't really meet the CEO of Ant Financial, and it's just fascinating how they've obviously Alibaba incredibly successful at putting all those things together, and off the back of Alibaba, they started a financial services company, but again, not a traditional financial services company, because they used the data to understand that all this money was sitting in cash within the Alibaba accounts, and then they could potentially offer a rate that then would use big data to assess the credit worthiness of all the consumers. And of course, they had all the data of transactions and margins, and they could offer this instant credit approval within your cash management account. So you go to your cash management account and you see all your cash, and they'll able to offer something like 3 times what a mainstream bank could offer. And then on the top right hand side, it was your credit that's been pre-approved. So if you needed credit to buy things, you could just buy it straight away because they'd already assessed you from big data. And then they said, well, the central bank was worried about them getting data from them, and they said, well, we'll just plug in. You can have live data. We don't need to report to you daily. We can do it by the second. So this kind of concept that you're talking about, that the evolution of businesses in a really emerging and growing market is different to what we've seen before, because of technology. So,
were you in line for some Ant IPO shares?
Yeah, so we're very fascinated by the Ant business model. It's definitely a disruptive force to financial services, in the sense that because they have such a huge ecosystem in e-commerce. They've also got all these other ancillary businesses. The amount of data that Ant Group or Ant Financial can see and analyze is just far superior than the traditional banks can. Now, the regulatory risks are always there, particularly when you're in a very disruptive industry, and disruption sometimes does bring in, disruption tends to occur first, and then the regulator catches up later, and that's happened in China. But what we see in China is that the regulator isn't anti-tech, quite the opposite, given what's going on in the world. The regulator is pro-consumer. It's a very pro-consumer, tech-focused regulator. And whilst that might be in the short term, a hindrance to the growth rates of Ant Group, in the long run, it's probably the best thing, that you create a much more stable and a much more focused financial service offering that does the right thing by the consumer. So look, we think the Ant Group IPO will come back. We're still interested because we think it's a disruptive business model. But look, I think from our point of view, we're looking at what's happening in Southeast Asia, and there are companies there that are kind of taking the Ant Group playbook and executing that in Southeast Asia, where there's a very large unbanked population. So where traditional banks actually just struggling to get out there, and people are buying things online for the first time, which is giving some of these companies in Southeast Asia that same advantage that Alibaba and Ant had in China for the last 10 years.
Is this similar to, we've spoken about a company called Mercado Libre in South America? Are you're referring to C, is it? The kind of e-commerce, I couldn't work out what the name was, but it's pretty clear, Southeast Asia Limited.
Is that right?
Yeah.
I saw it and thought it was a fishing company.
Yeah.
C Limited is an interesting business. They have Tencent on the register at about 20-25% investment stake. So they've got a very strong partnership with Tencent. Tencent, leading payment, it has a leading digital franchise in China, but a very strong payments franchise in China. So, we think there'll be a lot of cooperation between C and Tencent, know-hows, what to do, what not to do, what worked in China, what might work in Southeast Asia. But the focus of C is to build out an e-commerce business across Southeast Asia. And with e-commerce, there's the opportunity for payments. So they're also tagging on payments, and then you tend to take that payments opportunity into your offline world as well. You don't just buy things online; you also use it offline, as we've seen in China, and that hence we move to a much more cashless system as things are being transacted via our smartphones. And C has also expanded into Brazil. So they are trying to move into all these underpenetrated e-commerce markets. Most of the countries they operate in, e-commerce penetration hasn't actually even hit 10% of retail sales. So, versus in China, where we're probably closer to like 30-35%. So they're in much more underpenetrated e-commerce markets.
And Australia's only at 10% as well, isn't it?
Yeah, Australia's maybe C needs to have a look at Australia.
I've been writing a daily update where all these retailers say that they had 200% growth in online sales, and it's still 7% of total.
7, yeah, that's right.
It's like, just look beyond the headlines.
So in this Premier section, we all know, and we've been told about, the Chinese consumer or the Asian consumer and their love for big brands like Louis Vuitton and Gucci and BMW and Mercedes and Bentley. Does that, bit like tech, does that internalize as well to have homegrown brands? And is there an opportunity to find Chinese premier brands that are consumed by Chinese consumers, or is it still very much an external brand experience? We've held Louis Vuitton for a while and done incredibly well, but is there more brands internally developing?
Yeah, absolutely. The category by category, it does differ. However, yeah, there is. I think for example, in the alcohol space, there's a very, very strong awareness of the high-end Chinese Baijiu brands. So Guicha Maotai and Wulangi, which are the two premier Baijiu brands. We've seen the third player, Luzao, which is the 1573 brand. They've sponsored the Australian Open in prior years as another category, and those companies are still very dominant in that premium alcohol space.
Yep.
And the likes of high-end cognac or high-end whiskey or even high-end wine have done okay. They've done well, but they've not really conquered in because the palate, the domestic palate, is very skewed to those domestic brands.
Yep.
And that domestic consumption, and it's also for cultural reasons. So 80% of a high-end Baijiu is consumed around the 4 national holiday periods a year.
Yep.
So that's incredible amount of consumption in a very short space of time throughout the year. It's going to be hard to rock up to your Chinese New Year banquet with a bottle of whiskey.
Or Penfolds.
So there's cultural reasons why that will remain very strong. And as that premium consumer category grows in size, there's just going to be more consumers that enter that space and more trade up into the higher brand products. So that's definitely the case in the alcohol space, and in brand and apparel, that's also been the space. There's also been the trend. We've seen Nike does very well in China, but there's a lot of strong domestic brands such as Li Ning, and some of the brands of Anta that have done very well in China as well. So it is mixed. It does depend category to category. There are these domestic champions. We're seeing some of them emerge in the auto space, like the EV space, where they've kind of grown very quickly into these more cool brands that have emerged. Not sure if the market caps make sense, but definitely the brand's awareness has gone up.
The pricing's totally different. That's a different question, isn't it? So, Drew, you talk about a sporting brand in China, don't you? That's a basketball brand.
That was Li Ning. I'm a Miami Heat fan. Dwayne Wade, Jimmy Butler. I think Dwayne Wade was like their biggest star in the
just
US
growing, isn't it?
When he took that on, yeah.
It's interesting to see if that'll be reversed, and that brand then will come back to mainstream economies like ours, and we'll all want to wear their stuff. So. But I think we're running out of time. I think we ran out of time, actually. We're past that. So, Sonny, first, Drew and I want to say thank you. Hopefully we can have you back at some other point, because this conversation, I'm sure, could go for another 2 hours. Enjoyed the last 45 minutes or so. Thanks very much. Good luck with managing your capital and your clients' capital. Talk to you soon.
Thank you very much for the opportunity.
Thanks,
See you, mate. Cheers.